let's go ahead and kind of kick things off here. I am joined by Abby from Baird and Warner and Caleb of the Kambs Jennings group here at Compass Mortgage. They'll introduce themselves a little bit more in depth, but my name is Jessica Sims. I am our event planner here at Compass Mortgage, and I'll kind of be facilitating everything today as well as your questions. So we want to remind everyone that there is a chat box. Any questions, comments, concerns that you may have, feel free to shoot those in there. And then we'll have a more formal Q&A session at the end of the webinar where we'll make sure we get everything answered for you. So let's go ahead and get everything started. Abby and Caleb, want to go ahead?
Yeah, so my name's Caleb Jennings. I'm with the Kambs Jennings group of Compass Mortgage. So at Compass Mortgage, we're an independent mortgage bank. We underwrite our loans in-house, we fund our loans, and we really focus on giving our clients an amazing experience. We pride ourselves on education, being transparent, and really being your lender for life. So that's what we strive to do. So we're really excited. I'm excited to be joined by Abby today. Abby and I kind of go back. Hey, Abby.
Yes, we do. I know. So I've been buying and selling real estate in Chicago for over 15 years. But when I first came here, Caleb was definitely a part of the circle. So this is really fun to be, talking in this capacity because I think as a realtor and a loan officer, we really see a wide breadth of how people kind of make their living. And why we wanted to bring this to you today is, one, tax season is coming up, and two, interest rates are at an all-time low. There's a lot of opportunity out there, and it's three, pandemic. We're all living together, and it's really made us question the places that we live in and helped us see how important the space around us is and how it kind of helps us do what we want to do in life, do more of it. So we wanted to bring this today to you guys today to really think about, if you make self-employed income, that owning a home is possible. I think there's kind of this misnomer that, oh, I don't have real income, I won't be able to buy a house. But you can, you just have to plan for it, and we're here to help. So I'll kick it over to Caleb, but again, jump in, and we're here to help.
Awesome. Yeah, so I think that going to the next slide, what we're going to talk about is, what does it take to qualify as a self-employed buyer? Now, as a lender, what we look at for anyone that's going to buy a home, we look at four things. We look at your income, your debts, your credit, and your assets. So what we're going to focus on in this presentation is more on the income side of things, because really that's the one thing that's different. So if you're a typical W-2, a salaried employee, it's a little bit more straightforward on how we calculate your income, on what qualifies. But just to give you a quick on these four things. One, your income, we break it down in months. So it would be over the 12 months, what do you gross each month? So that's how much you got coming in. Your debts are how much are going out. We look at that, that's your debt to income ratio. Then we look at your credit score. Typically credit scores are pass or fail. So you either it's how you've been managing your debt, how you were graded on managing your debt, right? And then your assets are really, it's how much money do you have for the cash to close, for your down payment and closing costs. So going on to the next slide, I'm going to talk to you about what does it take to qualify for qualifying income, okay? So this is where it's different if you're self-employed versus a W-2 employed. With self-employed, we have to qualify you based on your last 2 years of your federal tax returns. And we base it off of what is considered your taxable income. Now, there's a note here about the 5-year verifiable. If you have 5 years, we can go off of 1-year tax return. I'll touch on that a little bit later here. But essentially, this is where the biggest challenges we see on self-employed folks. So you want to go to the next slide. So what we find is this. Many people with self-employed income have an awesome tax accountant. And the tax accountant, in their mind, what are they thinking? They're thinking, how can I help my client pay as little taxes as possible? And so they get very creative, and they find every possible thing under the sun to write off and that's lowering your taxable income. So that's really the rub and like what we want to really shine a light on. So you're gearing up to file your taxes. Good news is tax returns got extended to file in May instead of April. We got an extra month. So you have time now to really get your ducks in a row to make sure when you file, if you're planning on buying, that you're filing the right way. So if we can go to the next slide. So I think the key thing always is to have a great accountant, but also to make sure that great accountant knows that you want to buy a home. Because a great accountant, like I said before, will be thinking, how do I reduce your taxable income so you don't have to pay taxes? You need to let your accountant know, hey, I'm actually preparing to buy a home. So one really good thing to do is if you're preparing to wanting to buy and you're going to be filing your taxes, connect your accountant to me, like connect to your lender so we can have a conversation about really what do you need to qualify and to make sure that we're filing your taxes in a way that does that for you. We can go next, I'm sorry. So how is income qualified? I mean, it's pretty straightforward. We look at profit, not revenue. So like this quote right here is an example of a client we've had in the past who came to us saying, hey, my sales were 100,000 last year. I made $100,000. Woohoo! You know, and that's great. But then when we looked at their tax return, their tax accountant wrote a lot of things off and basically deducted 50,000. So 100,000 in revenue minus 50,000 in expenses equals 50,000 in income. So that client was only able to use $50,000 a year for qualified income, and they weren't able to get the home that they wanted. So again, this is a key thing. When you file your taxes, you got your Schedule C, and that's your profit and loss. That's where it's going to matter the most when you're gearing up to qualify. We can move next. Yeah. So I want to just give you 3 scenarios to look at, okay, on how we qualify. So for scenario 1 is 2 years. So in order to have qualify as self-employed, for us to use your income, you have to have a 2-year history of filing federal tax returns. Okay, that's the minimum threshold for self-employed to qualify. You can't have 1 year. Like you have to have 2 years of self-employed income. Now the way that works is this: is that you filed your 2019s and your 2020s, and we're going to go off of the 2 years and we're going to average them. So basically, we're going to do whatever your taxable income was for 2019 and your taxable income for 2020, we're going to divide that by 24. And that's going to be your gross monthly income we can go off of. Okay. Now, that's one scenario. The other scenario is maybe you've been self-employed for 5+ years. That means you've been filing your taxes. Well, in that case, if you have your accountant can do a certified letter saying, my client has been self-employed in this profession for 7 years or 5 years, and we could then just go off of 1 year of your federal tax returns. So it would be your 2020s we could go off of. And why does that matter? Well, let's say 2019, you filed your tax returns and you wrote a ton of stuff off and you didn't report as much income. Well, we would have to average that with your 2020, which could lower your monthly income. Well, if we can go off of 1 year, now you could say, okay, 2020, I'm actually going to make sure I report more taxable income than I've done previously. And then we can go off the 1 year and just average that 1 year. And that's something that could be great. Now, the third one, and this can get a little confusing, but I'm going to give you an example, is this. Let's say you've been a lawyer for 5 years working for a law firm, and you were W-2'd employed, you were a salaried position. Now you decided that you're going to be, or maybe they offered you a partner. Now you're a partner of this law firm. Well, technically now you're self-employed. So in this sort of case, again, we would have to verify it through your history of employment. We would have to look at your W-2 employment saying, okay, I've been a lawyer for 5 years. Now I'm self-employed because I'm a partner, for example. We can go off of 1 year. Now, this is going to be, there's a lot of discretion with the underwriter on this, but this could be this case. Let's say you're a carpenter and I worked for a company as a carpenter for the last 5 years. Now I've decided to go off on my own to do my own woodworking, if we could potentially just go off of 1 year tax returns on that as well. Does that make sense? Makes sense to you, Abby?
It makes sense to me. I mean, it's definitely hard to realize when you're like, oh my God, 2 years seems like a long time. So that is why it's important to start putting a strategy in place so that you can achieve these goals. It's a long game, not a short game, but it's definitely doable.
And that's right. And I just want to emphasize, reach out to me. Like, we will help you through this process, right? We're on your team. We want you to be successful. We'll give you the tips you need to get your ducks in a row. And we can really give you an assessment of where you're at and what are the steps you need to take to be where you want to be. So Abby, you want to walk us through the home buying process?
Yes, I do. So this is where Caleb and I are part of a team. We work together along with you to make sure that we're kind of guiding you every step of the way. And there are a lot of steps in the home buying process. We're not going to go into the, deep, dark secrets at this point, but I want to give you a top level so that you can kind of see what the key points are and how we'll help you along. So first, on the building your strategy, this is really critical. One of my favorite parts of working with clients is actually starting with a conversation, getting to know you so that we build a plan around what you really want, not just what you're seeing online, because we know that once you start thinking about buying a house, you start looking online. And so that kind of takes you to whatever you see versus what's really what you want and what your long-term goals are. So let's say right now you're like, I just want a bigger place, but I want it to potentially be a rental down the road because it's going to be part of my long-term investment strategy. So then when we do that, we end up, sorry, I'm hearing a little backlash. I don't know if this is it. Can you guys hear me still? Yeah.
You're good.
So when you start looking at your long-term goals, is this going to be your forever home or is this going to be an investment property? What's a wish list? Like, oh, I'd really want a huge yard, but I would settle for a porch. These wish list things versus I have got to be near a train. I have got to be in this part of town because that's where my kid and her mom live, all the different sort of scenarios that really relate to who you are and where you want to grow as a person. And part of doing this is also just looking at the neighborhoods, the market, and then knowing that I am here to be your advocate, your guide, and really help you along the way. You don't have to know all the nitty gritty because that's what I am here to do day in and day out. And same with Caleb in the mortgage role. So yeah, so moving on, after you build your strategy, next, we want to get to the pre-approval, which is so important of what everything that Caleb was saying is because it's not just saying, hey, Caleb and I aren't going to look at this and say, oh my God, you're approved for $1 million house. It really comes down to, yes, what can you get from a loan, but what are you comfortable paying each month? I want you to feel like, you know what, this is my threshold. Let's really try to stay there so that when we're looking at houses, we're being realistic. We want to make sure that home ownership is a point of pride and you love it, not some anxiety every time you open the door of like, oh my God, how am I going to pay for this? That's not owning a home, that's a home owning you. So this kind of critical upfront step not only gives you peace of mind, but in today's market where it's definitely a bit more competitive than it has been in the past, it also shows sellers that you are serious, that you have taken the time to get your ducks in a row, to get your dollars and cents in order to say, yes, I can buy this house, Mr. Seller, and you should sell it to me because I can do it right now. So this step, along with finding your realtor, finding your mortgage lender, and really kind of building your upfront strategy is the critical upfront to really unlocking freedom throughout this whole process. So,
Yeah,
all right.
and just to,
After you're pre-approved, let's see, we're going to really think about
Caleb, did you
sorry,
want to
just
jump
kind
in
of
at all?
pre-approval. While you're pre-approved, there's also the special programs that different lenders offer. And sorry, Caleb, I forgot. I wanted you to be able to talk about your awesome offering, Get Committed. Sorry.
no, all good. So on here it says why pre-approved or get committed. Okay. So just a really quick, a pre-approval is essentially where we as a licensed loan officer are going to review all your documentation that supports your income. We're going to pull your credit and look at your debts. We're going to review your assets. So documentation that supports that you have the money for buying the home. And with that, we verify that we can give you a pre-approval, which, that's great, rock solid. There you go. Now, one thing that we do that's different in this highly competitive, low inventory market is to help our buyers win. So we're all about winning, and because when you make an offer on your dream home that you want, we want you to win. Because if you're going up against 5 other offers, it can be really challenging, and your heart will get broken many times when you don't win on that home offer. So our Get Committed program is basically, instead of just the pre-approval, we take it a step further where we submit your file to our in-house underwriting, and they completely underwrite you. And then we can issue you a loan commitment, which is Get Committed, get the loan commitment, where we can, at Compass Mortgage, guarantee your funding, and we can close as quickly as 15 days. So what that does is when you're submitting your offer, you're going to stand out because the seller is going to be weighing what is the best offer. And a great offer is one where we can guarantee that we can fund the loan. The seller is more likely to take that. And just the last couple of days, I have 2 clients that use this program and that we've won. One was 5 different offers. The other one was in 4 different offers. And they won because we guaranteed the closing, that we could close and fund this loan. So I just want to emphasize that in this market.
Yeah, this is definitely kind of a critical piece. We'll talk about it. We'll relate it to kind of a later step in the real estate process, but it absolutely is a critical power positioning to be able to close early. So once we kind of know where we're at financially, we've set your kind of strategy of what you want, what you must have. It really is when you start looking in earnest for a home. And when you've got the right plan in place, it makes it a lot easier. And I think we all know to start with an online search. I think it's important to know that, let's say, the Zillows and the Redfins of the world, Realtor.com, they're tech innovative companies. They are very good at serving up a lot of information at volume, but they are not real estate first companies in terms of access to everything on the multiple listing service, and all of the detail that a broker may have in the comments that aren't consumer facing. So working with a realtor to not only just give you the full line of sight of the multiple listing service, but to also kind of help tailor your search. These are things that I like, these are houses I don't like, so that when we go to IRL search in real life, we kind of aren't going to see anything and everything. There's, particularly in Chicago, where it's a huge city, we need to kind of do some of our eliminating of properties to be really effective in our search when we go out there in real life, so that we're seeing things that you may actually like. And then if we don't, it's awesome, because it's going to look so different in person than it will when it's, pictures or a 3D sort of like drone situation. So we definitely recommend start going to open houses. That's really fun because you can do it on your own, and then you can tell your realtor all about your thoughts on it. But then you can also schedule showings, which is critical in this market. To sometimes you want to beat everyone else. If you wait till the open house, someone else is already going to have an offer in it. Working with your realtor to schedule showings ahead of open houses is going to give you a leg up on the rest of the competition. And last little note I want to talk about is the private listing network, because there is a whole little world where agents and motivated sellers and buyers kind of pre-market their homes. It's not out there to the public. But right now, over 40% of transactions are happening on the private listing network, and that means that they never even go public. So if you are really serious, this is important that you work with a realtor that knows what they're doing and also takes advantage of the private listing network. So, all right. Now, once we get out there and you're like, oh my God, this is the house. It's, you know, 7, 8 out of the 10 main things that we really wanted. We now say, oh, let's put an offer on this place. And the goal at this phase is presenting something realistic, but it's going to be attractive to the seller. You know, ideally we don't want to just turn them off or lowball them. And these days you probably aren't even going to get a response because most people are getting multiple offers. So the important step here is not just go off of what you feel like it should be. I really suggest that we analyze the data of what is going on, both with the house that you're looking at, but the area around it, the location, what else is going on in the marketplace, how old is the house, what condition is it in, has it been fully gut rehabbed? And then you want to look at the comparable properties nearby it in order to kind of say, hey, are we nicer than them? Are we less? And this is going to get us to facts and insights that we're going to be able to justify to the seller when they're like, oh no, we're worth this much. We're like, actually, if you look around, you can see that this is what we're basing it on. And it really gives you a much stronger kind of argument for, you know, this is not an argument, this is like logical negotiation. So this developing a pricing strategy when you make the offer is kind of a critical step. So then when we go to make the rest of the offer, there is definitely the price, but there are other things. There are how much money you put down for earnest money. This is a dollar amount that is used to show sellers that you are truly interested, because you know there is a chance that if you kind of walked away at a point unnecessarily that you could lose that money. So the more earnest money you have down, the more kind of a powerful of an offer it may be perceived as. Shorter inspection periods, like, hey, we're going to get our guys in there, we're going to look at this. Maybe you even waive the inspection because it's a new build, new construction, or you're like, you know what, I'm going to gut it anyways, so I'm not as worried about the inspections. Very much with some of the stuff that Caleb is talking about, offer to close quickly. If you're already halfway through the underwriting process and these sellers are like, oh my God, I want to know that I can be out of here in 3 weeks time, you actually could do that, where most people who are going for conventional loans aren't going to be in a position to do that. Anything you want to add there, Caleb? I get that?
No, I mean, I think that's right. I think with our Get Committed program, you already have a loan commitment. Our only contingency is going to be the appraisal on the property, but you've already met every contingency, so it's great.
Yeah. So now you submit this offer. We've thought through all these details. You submit the offer, and then it's presenting and negotiating. And after you present your offer, there are 3 ways that a seller can respond. They can accept the offer, they can straight out decline it, say, nope, not entertaining it, which is why we need to have a somewhat realistic offer, because they may just say no. And then there's counter offer. And this is where they come back saying, hey, we want slightly different terms. We want to close faster. Can we, we think that our price is justified. We'll only come down $3,000. Whatever it is, this is where there is negotiation back and forth over the kind of core value of price of the property. And you can go back and forth as many times as you need to until either you come to an agreement or someone walks away. So I think this is where emotions run high. This is where you really want to know what's important to you. And is this the property for you? Or you're like, nah, if we don't get it, I'm okay with that. Then you kind of counter a little bit differently. You may be willing to kind of walk away at a different point. So I guess moving on, going through this back and forth, your offer is accepted, which is awesome. And then begins what is called the contingency period. Now, this doesn't mean that you're locked in, you're done. This starts the contingency period where there's a few kind of major pieces that need to come together in order to be like fully under contract and we're closing on this house. One of the first and most important things is the inspection on the house. If you want to know, hey, is there any water in the basement? Are there any, was that roof really redone? Were there termites in there? And what are the things that you can't see that probably need to be remedied in order to give you confidence in moving into this, that you're not going to get a huge, bill on something that you just didn't discover. So this kind of discovery period is really important. And at the end of it, there's one round, another kind of round of negotiations that take place. It's not on the whole value of the house. You're not kind of opening up the can of worms of what you've already been through. This is more just looking at the items that aren't just wear and tear, but that really could become big ticket items or their health and safety issues. And so there's one additional kind of round of negotiation here. And if both sides are feeling good and you come to a price, then that is really where we hand things over to Caleb and the people in the mortgage side and looking at the underwriting, the title, the appraisal to make sure that we're able to carry this through to closing. So let's see, let's go to the next slide. That's where we call it the home stretch. So yeah, at this point, it gets more quiet between you and your realtor. I spend more time here kind of helping project manage, navigate, make sure we're meeting deadlines, but really you're working in conjunction with these guys. So go ahead, Caleb.
Yeah, so what Abby laid out here too, you'll see the secure a loan. Now, what's interesting about this, typically your loan gets secured in a normal process, like later in the game. With our Get Committed program, you would have already secured the loan. So just keep that in mind. Right. So this would already be done, right? Which is cool. So you secure the loan. What does that mean? Compass Mortgage says, we've underwritten you, you've met all the conditions, we're issuing you a clear to close, an official loan commitment. That's one thing that when you secure the loan. The other piece is that the contingency that we'll have on that is the appraisal. Any lender, any bank is not going to fund a loan unless the property is worth the purchase price. So it's going to have to appraise out. And very similar to your home, very similar is that it could come back, your appraisal could come back at value, which is fine, above value, which is better, or below value. If it's below value, that could be another point in negotiation that Abby and your attorney would work out with the sellers on that as well. And then to clear the title company is just going to make sure that the home that you're buying, there's no liens on the property, that it's clean and free so that there's going to be no issues once you secure that. So I mean, really, we work with you on that process. And then, once we have a closing date, and then Abby's going to take you through the final walkthrough.
That's right. So these kind of steps usually they can. I mean, obviously it shortens a lot if you've already been secured your loan, but typically a real estate transaction can take anywhere from 30 days on the quick side, but now even quicker, to let's say 60 days on the long side. Most people don't want to take that long. And then once you get through these steps, we end up on closing day. And this is the official kind of transfer of ownership where you've got signatures to sign, you've got your insurance in order. But a big part of what we have to start off with is the final walkthrough. And that final walkthrough is to make sure you do it hopefully the day of, so that the previous owner didn't throw a party the night before that you you didn't know about and ruin the place. So you get eyes on it that everything you agreed to do, like if he needed to fix the garage, we go in and check and make sure that he fixed the garage, and then we make sure to get the garage door openers. All of those things, it's putting a bow on it to make sure that everything is agreed upon from the property standpoint. And then from the lending standpoint, they really are held by federal laws to give you line of sight into all the dollars and cents that are going to be exchanged at the closing table. So you don't find out till closer to closing. You will find out the numbers, but it does kind of all come together. Sometimes it can be a little nerve-wracking because you're like, wait, what are we doing? But there's a lot of moving parts to come together at the end there. Caleb, go ahead if you want to jump in there.
I mean, all I'll say is this: is on your closing costs, is that, to me, for all of our clients, it's really like, how much is my all-in monthly mortgage payment, and how much cash do I need to bring to the closing table? Like that's what's on their mind when they talk to us. And we really like to, on the front end, give you a ballpark estimate of what your closing costs are going to look like on a specific property. It will change a bit, but like just based on it gets recalculated based on the title company, things like that. But we love to give you like a really good estimate so you have an idea. And then the closing disclosure comes out to you 3 days prior to closing. That'll be your final bottom line number, where you'll determine if you need to get a cashier's check or if you'll be doing a wire from your bank. But we try to have that for you earlier on in the process, just so you know what you're getting yourself into.
That's right. So doing all these sort of things, you come at the table. These days, it's really usually just you at the table with your attorney signing things. Maybe your lender if it works, but COVID has definitely changed things. We're a lot more remote these days. It's not you and the seller having to sit at the table or even seeing each other. Normally the sellers have kind of done everything on their end, and it's just you signing the dotted line. And at the end of it, you literally get handed your keys, which is a very surreal but awesome feeling, because you really have put a lot of effort into it at this point. And that's where, when you start the process, the more you are organized and really have thought about what's important to you, it makes this end moment all that better, because you feel like you've attained your goals, not just made a transaction happen. It's like a stepping stone to kind of bigger things, which is really, really cool. So yeah, the next slide, I guess that's kind of where Caleb and we want to give you the confidence to do it. We're not making the decisions for you. We're here to just help advocate and advise you, so you understand the steps and the processes in order to get to that right home. But it's really about you feeling confident to make these really important decisions that will kind of play out for the rest of your life in terms of starting your real estate investment strategy.
Awesome.
Yeah. So there we go. Now.
So we're now, if you have any questions, you can put them in the chat, and I'll turn it over to Jess, who can help us with that.
Yeah, Caleb, I just want to make sure you didn't have anything else to add there from the last slide. And then I can jump in with some questions that we're receiving here. So first question, I was employed for 5 years with a W-2 for my last job and was laid off due to COVID. And then in March of last year, started my own business in the same industry. Would I just go off of my 2020 tax return to qualify, or would I need 5 years of pay stubs?
Yeah, so I would have to look at this, because with the layoff and all that, I just want to look at it, because again, there is a little bit of underwriter discretion on this. So I want to say yes, maybe. Like, I got to look at it though. So what I suggest is reach out to me, and I can just take a look at your situation and let you know. But typically, like, if you've been in that profession for 5+ years and now W-2'd, and then now you went into self-employed in the same profession, we should be able to work with that. But I would like to take a look at it.
Okay. Is a business license also required? And I guess, yes or no, would it matter how long you've had it?
Not
Or
necessarily.
okay.
Not necessarily. I mean, really, it's going to come down to how you've been reporting your income on your tax returns.
Okay, got it. Let's see, Abby, this one's for you. Do all agents have access to that private listing network that you mentioned? And I can say too, before you jump in, that's how we got our house
Oh,
last March,
good.
was on the private listings. And thank goodness we did, because I feel like that was really right before things got really cutthroat or turned really hot in the market. But I can say it's super beneficial.
Yes, it is really beneficial, and it is accessible to all agents, but I don't think that all agents know how to use it. And working with an agent that not only has experience themselves, but has a team around them, has a great managing broker, has a great company behind them, has the resource of other expert agents, you know, the best in the business, to tap into, because that kind of shared brain trust really is going to elevate your agent's game also. And, you know, that's where I think sometimes there's certain more transactional or discount brokerages that they haven't been trained on this stuff, or they just don't know, and maybe they're part-time, and there's a lot to learn about this industry. So I think making sure that you are working with someone that knows the ins and outs is important. That's part of your initial discussion as you're, you know, you can interview one realtor or you can interview multiple ones, but I think it's two sides. It's a good personal fit, how you relate. Do you want to talk with them? Do you feel like you're going to communicate well together? And then the other side is kind of more the professional side of it. Do they know the business? Do they know how to negotiate? Can they help you really navigate what's going on out there? And so, yeah.
Kil, this question here, I think more geared for you, pretty in depth with some details, but overall, it seems like they're trying to decide, you know, between, okay, someone's self-employed versus someone, you know, has a direct employer, but maybe someone's credit score isn't as great, someone else's is better. So I think, you know, definitely a direct consultation would be better.
Yeah,
But I think one thing go ahead.
Well, just real quick, I mean, just on credit, okay? So if you have two borrowers that are applying for the mortgage together, we pull from all three credit bureaus, okay? We use not the highest score, not the lowest score, the middle score of the three. And if you're two borrowers, we use the lowest middle score of the two of you, okay? So just be aware of that. So if the second borrower doesn't have a qualifying score, well, now you together don't have a qualifying score. If the second borrower, you know, so just to keep that in mind. But I'd be happy to take that offline. Sounds like a little bit more pieces moving there.
Yeah, for sure. Let's see, if we do have to wait another year to buy, do you have any insight on interest rate outlook? Is that something they could
to be honest,
the magic ball?
You know, like, I mean, the reality is this. I can tell you what's happening right now. We were at all-time historic lows where folks were getting rates below 3% pretty consistently. Now we're seeing it tick up a little bit. We have a new administration. We've got the vaccine coming out. We've got a lot of like things happening that are changing the market. So right now rates have ticked up a little bit. They're still at historical, they're still low. Like, I mean, that's the thing. So, but there is, you know, the longer you wait, the greater the risk that rates are going to go up, but we just don't know.
Sure.
I knew I would be rich.
Yeah, I know it's really difficult to say. It's so difficult to say, and we all wish we had the right answer.
I do think the feds have said that over the next 3 years, they don't foresee it going much higher. There's obviously a global recovery that we're having to, you know, work with, but there are promising signs that the economy is recovering, and actually interest rates going up is a good sign that the economy is recovering. So that, you know, again, it's kind of like showing income on your income taxes. You're like, I don't really want to, but it does help in other ways. So
That's right.
Sure. And either one of you can chime in on this one. What does it look like if the appraisal does come back lower than the contract purchase price?
Yeah, but you want to talk about that, or you want me to?
Either way. I mean, this is definitely, well, go ahead, Caleb.
I mean, essentially, here's at the end of the day, it comes down to, let's say you're buying a $400,000 home and the appraisal came at 390. That means there's a $10,000 difference. Someone has to make that up. Okay, now one thing we can do as a lender is we can do a reconsideration of value, where if the listing agent, the seller says, hey, I disagree, that should be 400. If they have some comparable sales that weren't used in the appraisal, we can do one submission for a reconsideration of value to see if we can fight the good fight to get it to price out at 400 the way that folks believe it should be. Now, if it doesn't, if it's still 390, that means that there's things that could happen. One, the seller could lower the purchase price to 390. Two, the buyer could bring $10,000 more to the table. Or three, you can maybe meet halfway. The seller will come down 5,000 and you bring 5,000 more. It really just depends on the situation with the market, with the sale. You know, Abby, I don't know if you have anything to add to that.
Yeah, no, I do think that, and right now we aren't having issues with appraisal. I don't know what you've seen, Caleb, but that appraisers try to really look a much more in-depth look than, let's say, just an inspection. They're looking at the market to make sure that the mortgage is worth it. And then honestly, it protects you from overpaying also. Right. And so it is kind of striking the balance, but this is really kind of the opportunity to say, hey, you know what? The market price is this higher rate, and I want this home. So then sometimes buyers and sellers do kind of come, you know, meet in the middle to kind of make that appraisal number work.
Yep.
Okay, thank you both for contributing to that. I think the last question here, I think this is a great way to wrap it up as well. Going back to the get committed real quickly here, Caleb, could you just touch on how long it does take to go through that process? I think you explained it really well, though.
Yeah, I mean, so essentially, basically the process is just like any sort of pre-approval process you would start. We would take an application with you, which we can move as fast as you move on that. We have it online. I send you a link. You fill out the application. We document requests. You provide the documentation, and then we submit your file to underwriting. And really, basically, the underwriting process can take about 2 weeks, and then you'll get what is called a conditional approval. And what that is that it'll say, okay, we approve you for a loan amount of $400,000, let's say. However, XYZ conditions need to be made. Like maybe you were missing a pay stub, or maybe you needed to update some document. And then we resubmit that saying, okay, here are the conditions that you asked for, Mr. or Miss Underwriter. We give it to them, then they clear it, and then you get cleared to close. So we can do it in, 10 to 15 days, just depending, how it just depends on how quick you move and how much in order you have your things. But the thing is, what's nice about this though, is that day one, once you provide me your documents and I have everything I need, I can still give you a pre-approval right away. Like I can do that like that. Like you give me what we need, I can pre-approve you on the spot, get you that, and then you'll have your pre-approval. But then while you have your pre-approval, maybe you start to go looking for homes. We're going to go ahead and submit your file to underwriting, get that process going, so you don't have to wait to start looking. But then what happens is that as you're looking for homes, we want to, as quickly as possible, get you that loan commitment guaranteed, because then when you do make an offer, what happens is Abby will submit the offer. It won't be a pre-approval. It'll be a certificate of guaranteed of funding from Compass Mortgage. Abby will let me know, hey, Caleb, we submitted the offer. I'll call that listing agent myself and say, hey, I'm Caleb with Compass Mortgage. We underwrite, we fund our loans. What you have in your hand isn't a pre-approval. It's actually a guaranteed funding commitment from us. We can close as quick as 15 days. Our only contingency is your property needs to appraise. That's it. Our buyer's solid gold, ready to go. And that's how we win. So it can be a very quick process. But I encourage what I'm just going to share with you quickly. Often I find people say, I don't know if I want to do this just yet. I'll just get the pre-approval. Well, then they go make an offer, they don't win. Then they make another offer, they don't win. Then they make another offer, they don't win. Then they come back to me saying, you know what, maybe I want to do that program now. So hindsight's 2020 with me. I'm trying to encourage folks, do it now. Like, why lose 3 offers when you can start right now? You can still get pre-approved today, but we can start this process so that when you find the home that you love, my experience is when you love a home, so does everybody else that's in that price point. Everyone's like, Abby could speak to that. And I just can't tell you, like, I don't like losing. I like to win. And that's really what this program's about, is to help you win.
Yeah. And I think you made an important point from like the timing too, is that I think, all of a sudden we're talking about, we can get this done for you in 2 weeks. And you may be like, wait, I'm just starting to look and think. Absolutely. Like, you set the pace of how quickly or slowly you want to go through this process. And maybe your lease isn't up until September. So we, work together as part of our strategy session at the beginning, is to look at those timelines and to not have to rush. I think it's just, when you have your pre-approval or your get committed in place, should you stumble upon something over the next 6 months, you still have everything in order, and you have a sense of what you really want to spend and pay each month, so that you're looking from a place of knowledge. So again, don't feel like this means like starting this process. I think people kind of get the block. Oh, if I talk to someone about my finances, that's it. I'm buying a house. When it's like, no, it's like your financial advisor that you would get quarterly check-ins from a financial advisor, or your doctor. You go to an annual exam to kind of understand your state of your health. And so this is understanding the state of your finances in order to kind of make decisions down the road.
That's right.
And I think that was a great point, Abby, that you brought up. So should you find something, this allows you to act quickly if you so choose. But at the end of the day, it's up to you. So those are all the questions that we have. So thank you both so much for taking us through all of this and helping our listeners better understand how you can buy a home as on self-employed income. So if y'all want to add anything else, feel free to do so. But thank you so much again.
No, just thank you. I know Caleb and I would love to work with you guys. So many, many thanks. Talk soon.
Yeah, talk soon. Bye-bye.